Alright guys, let's talk about AMC stock, let's talk about the markets, but specifically, did the executive order go into effect today or did it get delayed? That's the main concept of this video. We gotta talk about really what I expect for next week, talk about the data behind AMC, as well as some of the news we got in the overall market. Some bearish, some bullish. Let's get into it. Hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section, but most importantly, thank you guys for tuning in. I hope that you guys find some value out of these videos and really help to grow your financial educations, especially in the markets. While we wait for the trade in AMC stock, do not forget this is potentially one of the last great buying opportunities similar to 2008 that you will probably see for the next 5 to 20 years. So take full advantage of that, add to your long-term positions in the meantime while we wait for the trade of your lifetime with AMC. Now, let's get into all of this key information. So I will just say it in the start of this video, it does not look like the executive order is going to be delayed. It looks like it is going into effect as of today. Now, when you guys are thinking about margin calls, right, people think it's like 1 second you get a margin call, the next second it's for share liquidations, margin calls, and MOAS. That's not exactly how it works in the financial industry. If you or me got a margin call, it could take 2 to 3 days before your brokerage would go in and sell your positions, unless you instantly just blew up your account and your broker seen that and they wanted to get their money out ASAP. That's not necessarily how it works with large institutions. They're usually going to have at least 2 to 3 days, if not longer, to service a potential margin call or to put more securities up or cash as collateral. So it's not necessarily, and I apologize if I ever like painted the picture of one day is going to be a main event. I really tried to focus on the whole month of June, but I do think next week is going to be a very important week because we're going to get a couple of days of this executive order being implemented, and I think by Wednesday, Thursday, Friday, you should see some very bullish momentum in AMC stock due to the executive order going into effect today. And if you're thinking about 2-3 days, that would, like I said, put us, you know, in the back half of next week. And I think that's very important to keep in mind, that the whole month of June is going to be very interesting and probably pretty bullish because of this. And that's not to mention where the liquidity situation is in this current market environment. It's much different than January and in June, right? There's a lot less money out there. It's a lot harder to access capital. So this executive order is going to be, in my opinion, more important than not this time around. And I think it could be very, very bullish. And that's exactly how I'm positioned with those June 17th $20 AMC calls, as well as the July 15th $40 AMC calls. And like Frank Ness says in this article, he does think that June is going to be a very important month, and he thinks we are going to see all-time highs. But this paragraph right here really sums it up from the horse's mouth. Quote, "This excerpt is not to confirm a specific date where we can anticipate AMC stock to move up in price action, but rather acknowledge what's happened in the past that very well could occur today." And this is obviously the executive order, and it is actually much larger this time around. The executive order for January as well as June only accounted for 30 securities. This executive order accounts for 70 securities. And will executive order 14032 trigger a short squeeze? Well, it says, given the nature of the rule, Executive Order 14032 will prohibit institutions to use Chinese securities as collateral, which will result in large margin calls. When Executive Order 13959 disarmed institutions with this collateral in January of 2021, AMC surged to $20 per share. The executive order was amended as stock surged, resulting in sharp declines, giving institutions this collateral back. The amended date moved to late May, where we saw AMC reach an all-time high of $72 per share. Institutions were then given their collateral back on June 2nd for a period of 365 calendar days. This collateral will no longer serve institutions on June 3rd until the order is amended again. The expiration date in early June leads us to conclude we will see major short covering in heavily shorted securities such as AMC stock. And because the list of Chinese securities being affected has increased, this means the amount of collateral that will be removed has also dramatically increase. If history repeats itself, this next surge will be massive. That's not even taking into consideration the next amended date. Only thing I do know is retail investors will need to keep an eye out on AMC's short interest data to identify whether short sellers are calling it quits or sticking around longer. Basically saying, if you guys have not seen the last video, go ahead, watch the last video. We read this whole article, but he's basically saying that he, like, quite literally says that he thinks we are going to see new all-time highs based off of this executive order. Not to say he is right or wrong, but if you just match up the dates, like the January rally, the June rally, and now this next upcoming rally, it all comes down to the executive order. But I think it's safe to say now that there is less liquidity out there, interest rates are higher, and it's harder to actually service margin calls when even the best equities in the world, quote unquote, stocks like Apple, Microsoft, Google, Amazon, are down in between 20 and 50% from their all-time highs that we even seen back in June. There's a lot less capital out there to service that same $1 billion margin call. You're going to need a lot more securities and a lot more cash to actually do that. So I think, long story short, the executive order was not delayed. It did go into effect today, but there is a lag here, especially this time around. The last thing people want to do is actually go out and cover on their AMC short positions. Like, it's very obvious. If we take a look at the Ortex data, we could see short interest is ticking up yet again. Cost to borrow rates are super high, with the short interest of free float that is sold short of 23.41%, current shares that are sold short of 120.66 million, cost to borrow max of 3.5%, cost to borrow average of 14.17%, cost to borrow max of 19.21%, borrowed shares for the day of 3.57 million, return shares 820,000, borrow change of 2.75 million. Now, I do think this is really a lot of algorithmic trading, and I think that could be to our benefit here, because on a risk to reward basis, like I said in the last video, it makes absolutely no sense to be selling AMC stock short. There's a much better chance AMC rallies 50%, goes up to say $18 per share from here, rather than drops 50% and goes to $6 per share. I think that's a pretty straightforward way to look at this. I'm not saying like $18 is like the top or anything, but it doesn't make sense to short the stock or continue to short the stock in the way that these hedge funds are shorting the stock right now. It just doesn't make a lot of sense, and that proves the disconnect between reality and the risk to reward profile of AMC, or just a lot of heavily shorted stocks in general. Now, you are looking at 100% share utilization, days to cover sitting at about 3.48, shares out on loan 179.57 million, free flow out on loan almost 35%. So we do have about 12% of the float that is outstanding, held in hedge funds brokerage accounts, that has not been sold short yet. So you have about 12% of the float that could be used against us, and I think a lot of that is being used against us today, considering we are down over 5% on the day. Jeez. We will see how things do hash out by the end of the day. Maybe we do get an end of the day rally, possibly even an after hours rally. That would not surprise me at all. But this is all going to culminate into shorts covering. Eventually they have to cover, and even if people sold out of AMC stock in the past, or you know, they got shooken out of their positions, whatever the reason is that they had gotten out, those are going to be the same people that are buying back in. That's why I say all the time, I don't care who buys, holds, or sells AMC stock. Human psychology will make it so people will jump back in, especially when that FOMO does really start to kick in, once you start to see those 50, 100% days. And if this executive order does stay in effect longer this time around, or indefinitely this time around, that's where you could see hundreds or thousands of dollars per share. And that's firmly what I believe. And I'm not asking you guys, to believe exactly what I believe. Obviously, you guys probably should not. You guys should come to your own conclusions. But I do have my personal money on the line betting on these statements that I am making. Now, I do see 11 orders totaling $2.69 million for the day, positive order value of 23%, and that goes without saying, but I'm going to say it when there's a lot of puts that go onto the option chain, especially when they are close to the money with a very close break even, and especially when there's not a lot of time on these options like the June 17th and the July 15th expirations, even the June 10th expirations in here, June 1st, July 1st expiration, excuse me. On the put side, that causes a lot of shorting activity from the market makers, and that is not reflected in the short interest, but it acts the same way as, you know, shorts potentially covering or shorts shorting the stock, right? But it happens on a more fluid intraday basis, so that's why it's not reported in the short interest. The short interest is really shares that are, sold short, that are longer duration positions. Like if we look at the average days out on loan, you're sitting at about 81 days. 82 days is the average days out on loan for shares of AMC stock. So, to put that into context, you're really looking at a quite explosive situation here if we do see things develop in the way that I think they will in the month of June. Now, for the most important option expirations that we're looking at, about 6,700 calls that are in the money for June 17th, 276,000 calls that are out of the money. Now, the puts are very exciting as well because the puts also help the stock go up. When the stock does go up, those puts that are in the money that the market makers had to short stock for, well, the market makers have to go out and buy their stock back as these puts run out of the money, as the calls start to run into money. And you're looking at almost 118,000 puts that are in the money for June 17th. We have not seen that many puts in the money, I believe, at all, if not for a very long time. So we have a lot of potential bullish fuel on the fire, we'll call it that, for June 17th, but as well as that for July 15th as well. About 7,200 calls that are in the money, 339,000 calls that are out of the money, and 54,000 puts that are currently in the money. So a lot of potential buying power that will have to actually, be hedged for if the price of the stock does go up in a big way. So I think that is very, very exciting. Now, what actually happened for the day and what the biggest things are that is moving the markets and why the markets are down so much today, you could see non-farm payrolls rose, payrolls in general, but non-farm payrolls included, rose 390,000 in May, better than expected as companies keep hiring. And this is not what the markets want to see. The markets want to see hiring slowing down. They want to see, potentially that growth concern, so the Fed will not raise rates as aggressively. Little do the markets know that the Fed is not raising rates because the employment market is good or that inflation is high. The Fed is raising rates so aggressively, and they will raise rates so aggressively, like nothing's going to stop the Fed, because they are too low. The rates are too low heading into a possible recession. Take a look at this. The last thing you want is rates low as you head into a recession. That's the last thing you want. Even look at, 08, right? The Fed was raising rates from 2004 all the way until 2007 up to 5.25%. And then when the recession came, they had plenty of room to cut rates down to pretty much zero or near zero. Down to about 2% a couple months into the recession, and then they went all the way to zero in the second half of the recession. But if rates were not at 5% before the recession, it would have lasted a lot longer, right? This 08 recession would have lasted a very long time. Same thing with the COVID recession. The Fed was raising rates from 2015 all the way until 2019. They stopped raising rates right before COVID, but the rates were still about 1.5% right before COVID. Drop rates to zero, able to stimulate the economy, and that's why they did so much QE as well, quantitative easing, bond buying, because the rates were only at 1.5%. And they cut them to zero. Like, it wasn't like 5.25% going to zero. That's why they did so much QE. Well, now look where we're at, right? You're very, very low, not even, to where we were pre-COVID. So the Fed has to get this rate up to, say, 3, 4, 5% before we go into recession so they can actually cut rates. Now, on the other hand of this, where we actually did lose jobs was not so good. In the retail sector, we lost about 61,000 jobs, and that was not good. That was the third largest bar, you could say, leisure hospitality. We gained about 81,000 jobs. And then in, what other sector was it? Let's go ahead and see. It doesn't even matter too much, honestly, for the sake of this video. One other sector, the second, Yeah, professional and business services rose by 75,000, and then you've seen government jobs rise by about 57,000. But you know, you lost 61,000 in the retail sector, so like retail jobs, right? So that is not a good thing, but it's not enough to like freak the Fed out or stop the Fed's rate hike schedule. So that was definitely not bullish as well, not bullish at all. And then you do have this that just came out. Fed Mester says inflation hasn't peaked and multiple half-point rate hikes are needed. Cleveland Fed President Loretta Mester said Friday that she doesn't see enough evidence that inflation has peaked and is on board with multiple interest rate increases in coming months. She also doesn't expect the central bank to pause after multiple 50 basis point increases this summer, though she said the magnitude of the moves could be reduced if inflation falls. Like I said, this is not about inflation. This is about getting rates up before a recession actually does come. There's a reason why all these Fed members have now since got very, very hawkish, and they want to raise rates super aggressively as inflation, core inflation, has came down the last 3 months now. It's because they need rates up for a recession. So that is pretty much going to be all for this video. A quick look at the technicals for AMC stock. We're sitting at $12.60 per share, down about 6%. Jeez. For the day. It's flirting around $13 per share, so it's good that we're not hitting these lower levels. We're still up like 30% over the past 2 weeks or so, so that is good. The RSI is at 45.44, so getting on the oversold side. The MACD is still surprisingly bullish, even though we have trended down over the last 4 trading days or so, so that is still looking good. Definitely primed, in my opinion, to see a rally for next week. All in all, executive order did not get extended and or not implemented, and that's what you guys need to know about the markets here today. So thank you guys for watching. Hit the like button, subscribe to the channel, get your free stocks down below in the description of this video. If you guys want to come trade with me live in real time, link down below in the pinned comment as well. I just bought a new stock today, a stock that I have never owned before because it is insanely undervalued. That stock is Coinbase. If you guys want access to all of the moves that I am making over there, check that out. Thank you guys for watching. Enjoy your weekends, and I will see you in